How's it going, everyone? It is Thursday, December 19th, 2024. Let's take a look at the pick from the last video, which was not Lulu, because I can't type. It was low. I took low yesterday at the 335 candle. I took the 252.50, 470, 247.50 PDS expiring next Friday, December 12th. And I took that for a 170 debit right over here. Now, what I liked about low was that this stock sold off, bounced, and was in a nice round of very heavy selling. You can see that it had compressed during this last market rally over here, didn't respond. And then as soon as the market started to flatten out over here from the 5th and 6th, 7th, right, starting to flatten out, and then low really start to break through that compression on the 11th. Started to really accelerate, got through this horizontal support right around here, which also lined up with 100-day SMA. We got a breakthrough, test, lower high, broke through the low of the day. So low was already pretty weak before the FOMC statement. Now, it's flattening out. Here's the FOMC statement. Bam, bam, bam. Heavy selling, very strong reaction. Compressed, moved down, compressed. So on this compression, that's when I took the trade. And I liked how it closed on its low of the day. No pun intended. Now, market had a lot of heavy selling yesterday. We're going to get to that in a second. But I suspected that there would be a small profit-taking bounce on the open. Usually after these bearish engulf, there is a bounce, and then we can judge how the bounce does. Now, I felt that as long as low kind of doesn't bounce, it holds flat over here, a pretty good chance to stick with the position. So open small, right? Filled in this gap, very tiny gap, so not really worried about that. And I just want to see this candle get smacked down. Okay, nice, nice, nice. Okay, we are good. We have a new low of the day, and we are targeting that 200-day SMA on the trade at 246. So that was my target. I was bidding for 100%. I thought there was a pretty good chance I could get that. Fell just short of that. I think it maybe missed a little close around here. I extended my profit target from 100% to like 150%. That ended up being a little bit too much, and I missed the 100% snipe you could probably get at the bottom of the day. So exited for a $3 credit, so about 175%-ish gain, something like that. So took a really nice win on low. Now, let's get into the market because I want to get into that before we talk about our swing trades and what I did with them. So going into the FOMC statement, here's my bias. I thought, look, we're in this compression. We're out of, 60%, 70% of our swings, even 75% of the swings. We're at a really good chunk of our swings way before this compression. Now, given that it was year end, I felt that I'm not sure if he would drift that much higher, but I don't know if he could drift a lot lower. I thought there would be a bid with that seasonality, and I thought FOMC would really be a non-event given the fact that the rate cut was very highly priced in. Now, ended up being wrong about the FOMC, but somewhat wrong on the move down. And I'll explain the somewhat wrong why. So if you look at my market analysis, go back 3 days, 4 days, I don't know. I have 3 scenarios outlined. The first one is that we have a mild compression break to the upside, and I gave that a 60% chance of happening. The second one was a weak dip, a 35% chance of happening, that either tests 600, maybe it tests this prior AVWAP level, or it even tests a 50 SMA. I'm okay with that move. I'm okay with that kind of weak little dip over there. The third one was a big move that broke through the 50 SMA. So I gave that a 5% chance of happening. So I was 60-40, market would go up, market would go down, and of that 40%, I thought it would most likely go down in a way where I'm okay with taking some of the heat. Now, we got the 5% scenario, and what's important isn't how accurate that 5% number is. There's no way to tell, right? This is a one instance. So if I had 90% accuracy, or then I had a 5% accuracy, you can't tell with a single event. You'd have to go back to other events to see where it's more likely to go. What is important was that I quantified the likelihood of events based on what I thought, right? So even though the 5% was unlikely, it was part of the plan. And that meant that I had to adjust my thesis on that unlikely scenario because my game plan was focused on the 95% scenario that I thought would happen. So we got the 5% scenario, and then I said, okay, well, let me think about this guy a little bit over here. And I'm going to pull up my outline over here. So first thing I did was, look, the short-term technicals have changed. And on a move down, right, off relative high, this is usually when my short-term bias is the most aggressive, when we get the first move off a shorter-term trend reversal. Now, it's only a -2 because we're in a bullish trend. We need a really big move fast. We'll have to see what happens, but this is still a pretty bearish move, right? On the bullish side, here is where I am, 3 on a short term. I'm very, very bullish, right? Right after these dips. Bullish over here, right? You're more bullish maybe over here. You're decently bullish, right, on these little breakouts over here. So that's when you're the most bullish, right? Over here and here. And then once you're in the meat of the move, you're medium bullish, and towards the end, you're cautiously bullish, and you're kind of ready to take gains. So I changed my market outlook, and I said, look, now we're broken down compression on heavy volume, and we're through the 50 SMA. That's the first thing. The second thing was, now, because my short-term bias had changed, my longer-term bias also needed to change, right? I have to decide, does that need to change? Because sometimes it doesn't always change, right? When we got this move over here, my longer-term bias was intact. If I think about my longer-term bias here, I think about what's happening fundamentally. I'm like, all right, well, nothing majorly has changed fundamentally, right? Inflation is still stubborn, right? Maybe it's a little bit more stubborn than we thought, but it's not like it's crazy. If you look at all the Powell speak, he says, look, I think the economy is in good shape. I think we avoided the recession. We've eased 100 basis points. If you look at my other things, not that Powell said, the historically strong starts to the year, they continue 81% of the time. That's more relevant in the first quarter. It's hold true for this year. GDP growth is still looking good. Unemployment's still looking pretty low. ISM services is still above 50. Mega cap tech earnings have had some mixed reactions, but they've really been holding up the market. So fundamentally, I'm like, all right, economy looks good. Fed is still easing. Inflation is stubborn and coming down. So that's not changed that much, right? But what really did change was that the market was pricing in some more aggressive rate cut schedule than what the Fed said yesterday, right? They kind of revised that outlook a little bit more hawkish. Now, even with all of that, right, you'd say, okay, well, even if it's a little bit more hawkish, how does that warrant a 3% decrease in SPY over 2 hours? So that's part of the story. And I'm going to go into kind of the mechanics of this drop. So if you look at this, let's look at this on an M30 chart maybe, right? So we're in this compression, and you can even draw, honestly, if you want, you could draw this little wedge, right? We're getting in this wedge formation here. ATR is collapsing. We're making lower highs, higher lows. This trend line is no longer needed. And, we're just kind of waiting for that next event. So first thing is long red candle. We broke through this low at 602 in the first 2 statements of the FOMC, right? So super heavy volume on this candle. We reached 600, chopping around over here. So now we have all these people who are long or positioned in that FOMC statement on the long side. They're getting squeezed out. We got the 600 guys, right? This triggers the next sort of stop. We get through 600. Now we're starting to really bleed through here, 599. We get another round of move through. That pushes us below that AVWAP from 11.6 and the AVWAP from the prior all-time high coming in right around 597, 598. Get through there, right? This just starts to push lower. So we get through over here. Now we have a really big move. We're at the SMA 50. We hit this level and we move past it. huge move lower, right? Because all of a sudden, all these people who maybe they had, out of the money puts, maybe they had short out of the money puts, right? That's what investors may use to get better entries on the market. On those short puts, right? All of a sudden, they were in the money, they were out of the money, now they're in the money, and it's going to create a pretty big gamma squeeze because there's so much momentum heading into this. It has a big flush out. The other thing you have to know is, and this is if you study like the VEX and the GEX and stuff like that, but let's say you have a short out of the money put, right? So if you're short a put, you have a bullish position on the stock, right? The market maker has to take the opposite position of you. They're the usual one filling the order. So they have a long put, right? Now, once that put goes the other way, once it starts going in the money, now they have to exercise that put, right? So you have all that, and there's a huge amount of volume and activity because it's triple witching, right? You got dailies, whatever, but you got your weeklies, you got your monthlies, you got your quarterlies, all expiring this week. There's going to be some rollover as institutions flip to the next amount of quarterlies. You have the futures rollover as well. So all that stuff is kind of happening. But when you have that out of the money put, that short put, right, now it gets exercised. So you are now long 100 shares of SPY. The dealer has to delta hedge, or has to hedge and take the opposite position the other way, right? So they take 100 shares short of SPY. Now, as long as it's not quite exercised yet, right, and you just have those out of the money puts that are out in the money, that delta is going higher and higher and higher and higher and higher. They have to delta hedge more and more and more and more. So as the delta goes up, right, they have to take more shares short of SPY, and that creates this really big cascading effect. So I'll see if I can link that article in the description. It's very insightful. I think it did a pretty decent job of explaining it, but I'd definitely recommend reading that article. It takes a couple of reads. It's a very sort of mechanical, focused article, but it kind of just peels back what is potentially happening under the hood. Now, it helps kind of understand the move a little bit, but it's not going to help you when all your positions are down. The move is the move, right? And it's like driving a car, right? You may not understand every single part of the engine, but you know that when the engine is sputtering, that something is wrong. So, massive move down. Okay, now we have to adjust our positions. We kind of talked about that, right? After this massive move down, readjust my positions, and I think that now, after this move lower that happened so fast, is my current thesis still valid? Now, I'd say no. And the reason I say no is that this move happened really, really fast on really, really heavy volume. So if you look at prior moves lower, right? Super heavy volume, a little bit of a bounce, and then we started to drift lower, broke to the 50, even broke to that test of that 100. Then we started to find some support. Here's that bearish engulf, a little bit of a move lower. We had a bounce to test half of that candle, but not a huge range. So in this massive move, right, that's a pretty strong signal that we're going to get a short-term reversal. So same bias, I think my thesis had to change. So now my thesis is, look, on a longer-term position, I'm a little bit less bullish because of this really long candle, right? I think we might still make a new all-time high in the next bounce. We're going to have to wait and see the depth and duration of this price action. But I think it might be a little more likely we could even make a lower high in the next bounce. I'm not exactly sure. I'm slightly biased to this new all-time high because we're in a bullish trend. So I'm going to lean on the trend until it proves me wrong. Once we see a move leg lower and then a cycle higher, right, 2 cycles is when we really start to make a change on the market. We need 2 cycles, right? 1 cycle isn't enough. Okay, so that's a longer technical change. Long-term fundamental, I think, for me, has been relatively unchanged. Short-term technical. Now we've broken compression and the 50 SMA to the downside. What's going to happen? And if you don't know what's going to happen, this again is where it's really important to quantify your probabilities. So I'm thinking, okay, we got this heavy selling. I think it's likely we're going to bounce, but on a shorter term time frame, the next 1 week, 2 weeks, 3 weeks, I think it's more likely to go down. And then the question is, how likely or how far do we go down, and how likely is each depth? So at this point, I said, look, we could either hold the gap now and the low is in, we base out, and then maybe move higher, or maybe we have a very strong, vicious bounce that gets back up to 600. That's what I'd want to see. I gave that a 10% chance of happening. I thought it's possible, but not likely. Same thing that I saw with this candle. Second thing is a support. We maybe find support at the 100-day SMA, right? And some AVWAPs from prior lows over here. They come into play over here. The 100-day SMA is kind of what I'm watching for. Ideally, it would be above this level. And then you can see how this level intersects somewhere over here. So you can see this gap is going to widen here. This 100 SMA is going to slope up. So probably something like 575 is pretty likely on the 100-day SMA. So maybe we find some support there. And I gave that maybe a 70% chance. Seems likely to me. Then the other 20% chance is that we find support maybe closer to the 200-day SMA, right? Maybe 540 is a pretty good level. Maybe, 550, right? There's a little bit of horizontal support. At that level, there's a gap. Here is some horizontal support. You can see there's a decent amount of price reaction at that level. So that could be the level. The 200 SMA is also sloping up. So by the time price intersects with that, it's probably going to be somewhere in the 555 to 560 level. It does slow down a little bit on these moves, but the 200 SMA is in a steady move up. It's going to take a lot of time for that to flip over. So that's what I thought. And if you sum those up, I think there's a 90% chance we're going to see follow through selling. So because we had that 90% chance, I said, okay, well, now I'm looking to exit my swing longs because I was willing to take some heat, but this was not the type of heat that I was expecting. So now I'm looking to get the best exit on those longs. And I mentioned how after this long move lower, you never want to exit on this move. There's always going to be a bounce on the next day. If you look at the D1 chart, right, not all bearish engulfs are the same. Here's the best example of a bearish engulf. This is the most similar example, I would say. Super high ATR, right? We get a small gap up, bounce to recover half the gains, right? This is an okay example. Small gap up, bounce to recover half the gains. Not the best example because this day the intraday price action was really chanky and choppy. It didn't match the intraday price action today. But you can see here's kind of the move, and then we got a bit of a bounce, right? We tested this candle, bearish engulf, and kind of flat bearish engulfing day. This also wasn't the strongest day, but we still got a bounce. So my point is that we'll usually bounce. And the bounce that I'm looking for very specifically is a small gap up, which is what we got, and then a decent move that recovers maybe about half of this candle. So somewhere 550, 595, 596, maybe in 597-ish, somewhere around there. So that's what I was watching for in the open. Typically, those bounces will last the first half of the day. And if you're not sure, right, just go back and even check. If I were to look at the market on an M5 basis, and I'm literally going to go to, let's go to 4-4. You can use this as a guide. Here's our heavy selling. Small gap up, right? We held it. We started to rally up higher. We got nice buying for the first half of the day, recovered half the gains, and it found some resistance at the gap from the prior day. So that was an opportunity to get out of our long. So this is the pattern that I wanted to look for, and an opportunity to exit longs for a win in that first half of the day. So we got the gap up, and if we go back in time, you see that we're starting to kind of, meander around a little bit over here, but I want to see this hold. I want to see this low, this open range hold. Because if you look at this example, right, the open range held, and we moved up pretty quickly. So I'm okay with a little bit of a compression, and then we move up, but I'd like to see this hold and then start to climb up higher. And then on this candle right here at 9:55, we got a move below the low of the day that closed. And as soon as I saw this, that was my sign to take gains on my position. So on team Took gains at 254. On Reddit, I took gains between 165.50 and 164.50. I had a kind of a partial order out, so got kind of messed around over here. And then on GoDaddy, took gains right over here, right? Here's that candle right here around 203.23. And then on Netflix, took gains at 907.20. So those were all the gains we took. And now we're also in low short, right? So I took gains here, and I knew that there's a good chance we're going to start to see some downside pressure. Low was already weak. So that I knew that I could actually stick with low because I'm going to have a little bit of a market tailwind to work with. Right, so we got a little bit of move lower. Low test at 200 SMA, and then now it's just kind of chopping around. So while I'm here, I'm just going to set an alert. And then market started to chop around today and hasn't really done a whole lot, but it is making lower highs. So that was the play. Let's take a look at these D1 swings overall, and then we'll take a look at what's going to happen today, what may happen tomorrow. So if we look at team, we took an entry somewhere right here, added, took partial profits, took remaining profits. So nice win. Maybe could have been a little bit more optimized, but I was playing the odds. So if the FOMC moved to the upside and I was right, we had a chance to potentially climb back over here on team. So that's what you have to think about, right? Think about your probabilities before a scenario and see what you're willing to risk. Reddit, same deal. Could have been maybe a little bit more optimized, getting closer to 180. Take some risk off at the gap. But it was really strong stock, and we needed that market signal. So took some nice gains on Reddit. If we look at Netflix, we ended up having a very tiny win / a scratch. I got it at 906.20, got it at 907.20, so dollar gain per share. So that's kind of basically a scratch. Fine with that because we know we entered the move a little bit late, right? The first leg. Had we entered on this breakout right here at 780, right? We're not missing too much profits off the top. This is 935-ish, getting a 907, so we're not missing too much off the top here. And then GoDaddy. GoDaddy held up beautifully, and we took some partial. We entered here. Took some partial profits here, and then we took some remaining profits here. So our average exit was probably somewhere around here at 205, and the high was 210. So took a really nice chunk of this move on GoDaddy. So all very, very nice winners. Now, looking at today, the market is dead, and there's usually a dead day after a pretty big trend day. A really, really big trend day. This is super common in 2022. So we're chopping around between the SMA 50 and the low from yesterday, which is right at a VWAP Q. So not going to recommend any picks for today because this is a dead day. I really don't know which way it's going to break, but my bias is a little bit more to the downside now. One, because it's heavy selling, and two, the fact that we actually haven't gotten any strong bounce, right? I mentioned that typically after a day of heavy selling, we typically get a bounce that will at least recover some of that candle. But the fact that we moved down, right, every bounce has been pounded, right? So this tells us that every time market's trying to get out, there's just more selling, right? There's just more dumping of these positions, and that supply is overwhelming any demand from one, people trying to pick a bottom, and just kind of more position squaring. So yeah, not a whole lot going on today. There's 15 minutes left in the market. I'm not going to give any day trade picks or any swing picks or any long-term picks. It's almost the end of the year. We may have one more day tomorrow. Maybe I'll give a pick then, but most likely low could be the last pick for the year. And if it is, I will make a video for now November and also December reviewing those monthly picks. And I will make a 2024 trade recap where I'm going to go through, I'm not going to go through all the trades of the year, but I'm just going to go through the results of the year, generally how we performed, what kind of worked well, what kind of didn't work well. So though a lot of those videos will be coming out pretty soon. So yeah, we're all in cash now. And stay light, stay balanced. You don't have to be overexposed. If you're sitting in cash, this is a pretty boring day. You can go on a walk or something and eat some food or do whatever. But if you were in cash before, you're mostly in cash before, you're not sweating this drop. If you're overextended, make sure you learn from this lesson, right? I took a whole bunch of heat on this April 4th candle. I took some hits over here, and I had to learn my lesson. I had to take a couple of punches before I learned how to dodge the punch, right? And even the trades that I exited today, I didn't feel like I was one step behind the market. I felt that I took a calculated risk, and the unlikely scenario happened, and so I had to adjust. And if the unlikely scenario didn't happen, then I would have made some really nice profits. So that's that. All right. So thanks for watching, everyone. Hope this video was helpful. Hope it explained why I had changed my bias, what caused me to change my bias, and what's kind of happening. We will take a look at what the market's doing on Friday and see if we can get one more trade for this year.